And who wants to know what's happening in the market right now in terms of sales? Okay, you guys, can you work on your attitude? I mean, I feel like you're my 13-year-old son, and I'm getting one-word answers and one-word responses, and it's really getting old. So can we just drop the act and just have a little fun in here? Would that be okay? Thank you. I appreciate that. All right, so here we go, guys. We're going to talk about the market update. So every month we do a different market update, and usually we give different data every single week just because the different markets are putting together all of their data at different times during the month. So we're going to start with the 2 markets that we already have reporting for this month. The first one is Houston, so we have all of the December data listed in here. So last month, the closed sales in Houston were down 33%. The last time that we saw closed sales in Houston down 33% was roughly in the 2009, 2010, 2011 timeframe. So from 2006, 2007, at the height of the last market cycle, from where it ended in roughly 2010, 2011, we got about a 30% haircut in terms of the number of properties that were actually sold. That's what we're seeing in today's market too, courtesy of Chairman Powell, who's gone full Volcker to make sure that we get inflation under control. So he's more than doubled the interest rate, and that has pushed a lot of buyers where? Out of the market. Who are my rental property owners in here? Who's doing the happy dance with their rents? Yeah, that's right. Whose house is always full right now? Yes, yes. So it took a little while, right? We were persona non grata for a long time, but now we are the only option in town. So what we have found is even though closed sales are down 33%, the number of leased listings that are on the MLS, so a large portion of leased listings are off of the MLS, especially at the larger apartment complexes. But lease listings are up 14%, so that's where a lot of these would-be buyers have gone. And the lease price up 3.5%. New lease listings, so we've added over 950 new units versus where we were last year. Who are the people who are adding these units? People who would really like to sell, but have said what about the market? Sales are down 33%. I'm not going to be able to get that price that I was able to get in March and June when the market was at a fever pitch. So I'm going to take my ball, I'm going to leave the playground, and I'm going to go to a new playground where I'm going to lease out my ball instead of sell my ball. Yes? Yeah, it's like child games, right? We play them in real estate as well. So that's where many of these sales or would-be listings have gone. The average sales price, however, year over year, which is how we compare in real estate, is up 5%. But if you were to look where it was May versus December, you'd see that it's down probably close to 10% in some of the major markets throughout Texas. Days on market has gone up. Months of inventory have gone up as well. So many of you guys are familiar with the concept of days on market, but it is more nuanced than you probably think it is. So a lot of people think days on market is how long it takes to go from being active on the market to selling. The truth is that it's actually how long it takes from going active on the market to going pending. The reason why they stop it at pending is because they know that some sales take 15 days to close if it's cash versus 45 days to close if it's an FHA type of a buyer. So they stop counting at that point. Now, months of inventory is really one of, for me, the true indicator of the health of the market. So months of inventory have basically doubled over the last year here in the Houston market. What does that mean, months of inventory? Basically, it means if you stopped listing houses today, based on the buyer demand that we've had over the last 1 year, in exactly 2.7 months, we would be completely out of an inventory of homes for sale. You got that? So stop listing houses based on the buyer demand that we've had over the last 12 months. This is how long it would take before we're completely out of inventory, 2.7 months. Now, even though we're doubled versus where we were the same time last year, the historical 40-year average in terms of months of inventory is about 6 months of inventory. So 6 months of inventory is what they call market equilibrium, where if we stop listing houses today, we'd have 6 months of houses to sell before we completely ran out. They say anything below that 6 months is more of a seller's market. Anything above that 6 months is more of a buyer's market. Now, when the market is going down at speed, this months of inventory number can be a little bit deceiving, which means that when the market's going down at speed, this months of inventory number is actually higher than what I'm showing here, just because the market has changed so dramatically over the last 6 months as we've more than doubled that interest rate. So do be aware of that. So for some of the realtors in the room, it may feel like a light switch has gone from on, seller's market, to off. Not even a buyer's market, but just in some cases, no market, which is how it feels when you drop sales over the course of a year by 30%. Now, that's not to say that there are not opportunities to be had, but they are different opportunities, and you need to price your purchase correctly, because as a real estate investor, we make our money on the buy. We make our money on the buy. If we buy it right, and if we manage it right, then when we go to resell it, then we can collect our money. But if we buy it wrong, then we're already starting out in a hole. Pending sales, our closest leading indicator of what closed sales will be next month, down about 19%. Active listings, we've more than doubled the number of listings year over year, which sounds like, or where 50% increase in listings year over year, which sounds like a big increase, but in some markets it's gone up by over 200%, specifically the Austin market. If you look at our actuals, 2022 versus 2021, our sales were down 11% in the Houston market, with all of that drop coming in the last 6 months, and our average price was up 10% versus 2021. So a lot of people are very confused of how we could have such a big decrease in the number of sales and not a very big decrease at all in terms of that average price. Why is that? Who can answer that question? This is the interactive part. Lower pricing? Overpricing? The comps from last year were overpriced. How about the basic law of economics, supply and demand, right? We still, even though we have more houses than we've had in a year, supply is still relatively low. So when supply is low and you still have demand, so we don't have 100% demand year over year, we have about 70% demand of the demand we had the same time last year. But because that supply is still relatively low, those prices will still go up. Now, I cannot guarantee that that's going to hold for 2023, especially as we get in those last few months of, especially as we get in the last few months of the second quarter, or the 3 months of the second quarter of 2022 versus 2023, just because, again, it did hit that fever pitch. But the rest of the year should play out pretty well. Even if we're down year over year on sales, it's still a good year because we're giving back some of the paper gains, some of the unreal gains that we had, I would say, throughout a large part of 2022. For the Dallas and Fort Worth market, the other major market here in Texas, the average price was up 4% year over year. The total sales were down 29%, so you're going to see sales down in that 29 to 33% range in most of the markets. More than doubled the months of inventory. Pending sales, our closest leading indicator to what closed sales will be next month, down 29%. Active listings up 160%. Where are people going? They're jumping into leases. So there was a 22% increase on the properties that were leased in the MLS. Now again, remember that many of the apartments are not not leased on the MLS. And the prices in the DFW market for leases up 9% year over year. The final 2022 sales were down 12% versus what they were in 2021, but the average price was up 15%, so the average price was quite healthy. For the Austin market, right now we're still reporting the November numbers. They'll probably report their numbers as soon as I get done talking to you guys today. But I did do a refresh right at 5 o'clock before I got up here. But last month for November, the year-over-year sales price was flat. Closed sales were down 37% in Austin. So remember, Austin saw the biggest run up in terms of the number of sales, in terms of it being a place where a lot of people were migrating to, specifically from California. As Elon Musk said, put on a cowboy hat and said, "Howdy, y'all, I'm a Texan now," right? Moved many parts of his company to Texas. Months of inventory up more than 3x. Pending sales down about 1,500 versus where they were last year. Probably one of the most interesting stats in Austin is that last year this time, the close price to the original list price was 106%. So what that means is if it was originally listed for 100, and I know no such animal exists, just kind of roll with me here. If it was originally listed for 100, it sold for 106. Now if it was originally listed for 100, it sold for 91. So Austin's seeing the biggest gap in terms of that. We're still waiting on the 2022 final sales, but they were down probably in around 20%, but the average price in Austin still up over 10% year over year, just because the first half of 2022 was so strong. In the San Antonio market, again, reporting for November, don't have the December numbers yet. Average price up 4%, sales down 24%, pending sales down 41%. Where are people going? Again, into leases, which are up 21%, lease price up 7%. So guys, that is the market update. And we also have the total months numbers, but these are representative of what's happened in November. So I'm not going to take a whole lot of time going through those, other than to say closed sales throughout all of Texas last month down 30%. Average sales price still up year over year. And I want to do just a very quick special announcement for you guys as we wrap up my part of the presentation. And have you learned, I'm curious, have you learned a few things tonight as we've been together? Yeah. 3 people. Awesome. Good. I'm glad my work here was so impactful to you all. That just warms my little heart. So I'd love to be more impactful for you guys. So I'm often asked what I do for a living. So in addition to real estate investing, one of the funnest things that I get to say is that I help people quit jobs that they hate so that they can do things that they love. And it feels amazing to be able to do that and to have an impact on people's lives. And hopefully at some point you guys will say, yeah, that was not so bad. So part of that journey for me is teaching you guys all of the things that I have learned investing over the last 2 decades.